So hi everyone, welcome to this episode, I guess. This is my special guest today. Please introduce yourself.
My name is Akin Jones. I am the CEO of Ella App, formerly known as Ella Credit.
Awesome. Can you explain your journey a bit about how you sort of came to founding iAdda Credit?
Yes, went to school in Washington, D.C., attended Howard University. After that, went into investment banking, worked for various investment banks on Wall Street, helped launch some TMT divisions on technology, media, and telecoms divisions on Wall Street. Came back to Africa, my late 20s. On the investment banking side, was a vice president of one of the larger investment banks here, and then went to another investment bank, became the head of investment banking. Decided I saw a big problem from all the advisory work I had done in the lending space. There was a huge gap in retail lending. The big banks were not servicing that need. Even people who earn six figures, for lack of a better word, couldn't get a loan. And decided this is a problem that we had to tackle. And first, we had to look at what were the core reasons that people couldn't get loans. And a big one was identity, and the second one was credit scoring. And if we could tackle that in an alternative manner, we knew that we had a very huge market and opportunity on our hands.
Yeah, I mean, I know as well that access to loans is a massive problem. When I think I've looked at studies saying that people rate limited access to credit as the number one reason why it's hard to grow businesses in places like Africa, above, for example, regulation, access to certain services, etc. I mean,
Yep.
so what is it exactly then which iAdda do?
So what do? We offer loans digitally. So basically, we're a mobile-first digital lender. It's how we started, but now we're a mobile-first credit payments provider, which means we basically any kind of credit facilitated product we can give you. So you can get loans on our platform, you can make payments on our platform, and you can borrow to pay bills on our platform, and you can also get insured on our platform, and you can also borrow to get insured. So any type of credit facilitated payments you can make on our platform, and it's mobile first. And that's the we use mobile data to assess credit.
Awesome. I mean, when you talk about data, I mean, how exactly does that process look like? I know you mentioned there's the identity problem, and then the other thing is credit scoring, right? So it's hard to assess risk is one issue, and the other one is how do you tie it to people's identity. So as far as I understand it, you have a couple of good technological solutions to that. Could you just walk me through exactly how you do that?
Yeah, so in 2015, the government introduced a biometric verification database, and we got integrated into that. And that was a very big step in being able to assess, verify identity. We also use facial recognition in partnership with Amazon, AWS facial recognition, where we use our facial recognition software to figure out proof of life. And in terms of address verification, we use a lot of GPS co-location data to verify addresses for people who don't have traditional addresses. And so you mix those three together, biometric verification, facial verification, geolocation, you can kind of get a pretty accurate identity verification for people who they say they are, and reduce fraud to a certain extent.
Yeah, interesting. And then for assessing risk, I mean, I presume do you have a process by which you use the data from people's phones, for example, to try and better understand their risk profiles and customize your lending?
So, initially started with, using customer phone information to assess credit risk profile, basically just looking at various mobile phone data points. But, it's even evolved from that now. So now our customers are granting us access, at least the ones that have some sort of bank account or credit profile, are granting us access to their credit profile, their bank accounts, their telephone data, and that's helping us create alternative credit scoring sets to be able to give them a credit score and give them credit.
Yeah, awesome. So I mean, would you say it's largely like an algorithmic sort of process then?
Slightly algorithmic, but constantly changing. So more a mix of algorithmic with artificial intelligence. Because things are constantly changing. Users are constantly changing their behavior.
Yeah.
So we have to look out for that behavior.
So
Our smart things have to tell us what those changes are. Because if it's algorithmic, then it can be then fraud levels will be high because people will know that, hey, if I do this, this, and this, then I'm going to get a loan, and you can't allow that to be the process.
Yeah. So is it, as it were, machine learning, which you're
Yes.
Yeah, awesome. Yeah, I mean, you mentioned as well that you're not just trying to provide loans to people, but you're also trying to provide other services as well. I mean, that feeds into the whole idea of, I guess, people have been very underbanked historically. I guess, are you guys trying to sort of position yourselves as the new modern sort of technological banking from your phone, where you have access to a wide variety of services?
Yeah. I think it's it's easy for us to have simply gone from being a digital lender to becoming a digital bank. But for us, we see the opportunity as much larger than just being a digital bank. We see the super app opportunity, for lack of a better word, where we can provide multiple services to people, not just banking services. From the data we've seen and from the customer use loan cases, we've been able to derive kind of like what our customers are spending money on and what kind of products we should actually be offering these customers firsthand. A good one was health insurance, noticing that a good portion of our borrowers are using their money for medical expenses, and how can we and so if we had just tried to pigeonhole ourselves into just
broke up for a second. Would you mind just repeating that last bit? Sorry.
So what I said, we could have easily just wanted to become a digital bank.
Yeah.
But we're providing various lifestyle services by looking at our customers' spending patterns and spending trends.
Yeah.
What kind of lifestyle products we can offer them, that just makes their lives easier. And using machine learning, AI, can we build smarter, more efficient products for our millennial customer base that we're seeing? And
yeah, I mean, would you say in that regards as well, that I guess in the developed world, there's the case that there's major incumbents, people are already heavily served. Do you feel like in the developing world, there's still a unique opportunity in that, generally speaking, the population is very young, they're very tech savvy, and traditional incumbents in the way that you see in the developed world don't yet exist. So there's much bigger sort of space to expand and disrupt.
Definitely. We are seeing it with cryptocurrency. Nigeria was ranked the second largest crypto market in the world after the US. And this just kind of tells you the kind of trends that we're seeing in third world technology. People are looking for ways to get access to wealth. They're looking for ways to get access to credit. And they're looking for ways to bypass traditional systems that just don't help them. I think, in the US and in Europe, a lot of things are very structured, addresses are structured, credit processes are structured, insurance underwriting is very structured. Here, you're going to have to create alternative products and alternative solutions for a lot of the emerging market population and emerging market generation, and that presents its own opportunity.
Yeah, so you mentioned as well, like you were using the data you derive from people using your products to then sort of create new products for them, such as health insurance. Do you have a good idea of how people do use your loan services? Is it largely, you mentioned health? Is there also a big case for businesses using it to expand their growth?
Yeah. I will roughly say about 50% of our loan uses is small business use cases. So we're talking about for small scale farmers, people who own small kiosks. They don't need that much money. $50, $100 would go a long way for them. $200 would go a long way for them. And that's where you see a lot of our use cases. And then everyday personal needs will probably rank second. Personal emergencies, and then medical and insurance, medical expenses could rank third. a sick child and I need an emergency, and I need some money to, take him to the hospital or buy him some drugs and things like that will probably rank third. So business probably is definitely first. So any kind of small scale business is ranked third, and then personal use is probably going to rank second.
Yeah, so with your Credit Coin, can you like explain how the integration between Ayala and Credit Coin works?
Yeah, definitely. I think, when people think crypto, they always think of it from a Bitcoin perspective. And when we mention crypto, we just think about it more from a blockchain angle. How we recording data, how we making that data accessible so we can continuously raise capital. How can we use the blockchain to provide access? There's something I like to call a disconnect of capital. You'll say the West has a lot of capital, but not a lot of places to allocate capital. And that's why returns are so low. We're talking sub 5%. And you can say down in emerging markets, they have high rates of return, but high risk. And, blockchain is a good way to aggregate that risk. How do you reduce that risk? You can only reduce that risk with transparency. And I think when you look at Credit Coin, you look at it as a way to create transparency. We like to say it's a project that we also help comb from the credit side, letting the blockchain engineers understand what was very key and critical on the credit side of things, and how it could all flow and how it could all work together. How do we get people to trust that the data that they're seeing is true? How do we disperse that money, to customers digitally and create some kind of a trail, and also create a repayment pattern trail for those repayments also. And how do you create this system where there's no manual manipulation going on? And if that can be done, that can solve the capital disconnect that a lot of emerging markets are facing. And this is a real $1 trillion opportunity on the micro loan space.
Definitely. I mean, I think there's the figures are there might be there's something like over 1 billion, or if not hundreds of millions of small and medium enterprises who just don't have the access to capital they need. And obviously the biggest obstacle are borders in one sense, and that they stop the flow of money, but it's also, as you mentioned, the factor of trust is just very hard to build.
Yeah, you're right. It's in Nigeria alone, just our high level research this year alone, at least 350,000 micro and small businesses have requested access to capital on the platform. So how do you get those guys access to capital? And how do you build processes for them too? Because a lot of them are unstructured businesses. So how do you build some kind of digital process, usually mobile first, where they can take loans on their mobile, maybe record their inventory on their mobile, ensure they pay you back on them, via their mobile, and create that whole digital process mobile first, and where it can't be manipulated in any way, and that data is objective for everyone to see.
And you're creating like a paper trail as well, by which these businesses can then sort of prove a variety of things which are needed for the modern day businesses to run and expand.
Exactly.
I mean, so I'm sure with your Credit Coin model, obviously people who accumulate good credit records, I presume they then also receive better interest rates. I'm guessing that's a strong feature in your platform.
Yeah, with or without the blockchain, people who pay back will get better interest rates. I think that, what the blockchain will do is will give them more access to more capital. I think it gets to a point on our platform where we can't give out more than $100 or $200 loans, right? And we want a position where people who've proven themselves can get higher and higher loans and create more wealth, and also employ more people and break that cycle of poverty that we've seen. We're not going to say that we're a totally altruistic platform. Of course, we're a profitable platform. We're for profit first, but what we're still trying to build is a socially conscious, profitable business. We want to drive rates as low as possible, but that also requires us being very, the more we can manage risk and the more transparency, the lower we can drive rates. The higher we can get returns.
Hmm. And then again, that's when identity is important, because you have a way for these companies to link their identity to their credit score.
Yeah. And when we say companies, for us, it's mostly individuals. We have 1 million registered users on our platform, and it's mostly individuals, but a lot of companies are individuals in emerging markets. A lot of individuals don't register formal companies. They just
Yeah.
do business and carry out their business as individuals, not as structured entities. So, and that's where that blend of being a business and an individual comes into play.
Yeah. Awesome. Um, yeah, I mean, what are your plans for like this year and the coming years then? Have you got, I know you're currently operating in Nigeria and I believe the Philippines. Are there plans to
Yep.
expand that to more countries?
Yes, I think our plans for this year is to dominate, invest, dominate, expand. So we want to invest a lot in the Nigerian market, where we already have most of our users. We want to dominate. The more capital we raise, the more we can dominate. We've proven to be very capital efficient.
Hmm.
With the amount of capital we've used to acquire 1 million users, it's probably never been done before. So expansion is phase two. Expansion across Africa is key for us. We see a lot of similarities between Southeast Asia and Africa, but we're gonna go to those markets that have the most similarities first. So we're not gonna say it's gonna be solely focused on Africa. But if we see markets with similarities where we can achieve scale very quickly, then we'll go for those markets. And where we can bring on board talent to execute on our vision, then
Yeah.
we'll scale into those markets.
Awesome. And yeah, I have a question in regards to, I mean, I'm, as far as I'm aware, a particularly important feature for these kinds of business is the non-performing loan rate. Now, I've not looked it up, but has your, as it were, the combination of accurate credit scoring, data, machine learning, I mean, is essentially competitive non-performing loan rate the foundation of your business?
Yes. Last year was a rough year for everyone. I can say from roughly about 7-8% non-performing to about 12%. But
Yeah.
this year, I think looking better. Last year was just out of everyone's control. People couldn't go to work. People were locked down, so they can't make money. Some of them can't repay loans. But even with that, we still had a flat year. Not usually we're used to very high growth years, but last year was a flat year. But our non-performing loan rates are still pretty good industry-wise. And we're looking to be smarter around our credit scoring. We've introduced more and more ways to get people banked, and by getting them banked, we can get more data from them. And so, we're creating platforms and tools that allows them to go from being unbanked to being banked, so that we can integrate them more into a more formalized system and get more credit data.
Yeah.
So, NPLs are very core in this business. But if you understand your customers, and if you build a relationship with them, even during the bad times, you can kind of restructure their loans. You can defer their loan payments,
Yeah.
and you can also help them during a tough time of need.
And
Which builds
I presume COVID as well, like you mentioned, it was not a bad year, and that you managed to make it through. I'm sure a lot of companies have struggled far more. But I mean, was it also in a sense an opportunity you mentioned there that by providing flexibility, you can build that trust. I mean, do you think it was also an opportunity for you guys to sort of establish your platform as a reliable service to these people in a time of essentially difficulty to many people?
It was, and not just from the lending side. We enabled them the opportunity to get access to healthcare. So we stopped thinking just about money, and we gave out paid insurance plans, but we also gave all our users 30 days free. So of insurance, a way to bring them into the insurance space, and that cost us money, but it showed that we were a people first organization that was going to put our users first, give them the ability to get health insurance, get tested, get checked, get healthy, because the pandemic was brewing. And so even though we're going to charge them, But the first 30 days of being signed onto the insurance platform was free. You get your health tests free, and we just wanted to show that this business is a long-term partnership between us and our users, and
Yeah.
We know and hope they appreciate it.
Yeah, that sounds awesome. Yeah, I mean, can you maybe talk through how, I mean, Glura and IL have been working together for quite a long time. Can you just sort of explain how that partnership sort of was formed and what the idea behind that was?
Yeah, and in 2016 we met, 17 we met, 16, 17 we met at 500 Startups. And in San Francisco, we're both San Francisco-based companies. We have a focus on Africa, and but we're both San Francisco-based companies at the time. And we just got to talking. We definitely I personally always had a vision for the blockchain and cryptocurrency and how it could be of use in countries that had very unstable interest rates, unstable currencies.
Yeah.
And we kind of just knew it would be a very key thing towards lending. And we just got to talking and exchanging. Tay and I just got to talking and exchanging ideas. How can we work together? We're capturing this huge market that people don't believe in, and at the same time, people didn't believe in cryptocurrency. And we kind of knew that both markets couldn't work hand in hand to solve each other's problems. One could solve the capital problem, and the other could solve the user acquisition problem for the other.
Yeah.
So how do these two ideas come together and solve problems without going through the traditional routes of necessarily venture capital, which we still have raised from very good investors.
Yeah.
But how can we create alternative channels of capital and alternative channels of identity verification, of credit scoring, of data management? And the blockchain proved to be that. And, Glua has the technology, and we have the technology on the credit scoring side, on the customer acquisition side, on the product side, and sometimes they say two heads are better than one. And, that's how that partnership came.
Match made in heaven. So thank you so much for coming on the show, Akin. Yeah.
Sure. It was a pleasure, Toby. Enjoyed it. We look forward to doing it in the future, as we constantly do.
Yeah, awesome. Well, I look forward to updates, and maybe we'll speak again soon.